Okay, Bismillahirrahmanirrahim and good evening to everyone. Before I start, this is our first live revision class for the June session 2024. And in your relevant WhatsApp group, I'll keep updating you. Normally, we'll be conducting, inshallah, weekly revision class I'm going to conduct at least once in a week, but towards the exam, near to the exam, the frequency will increase. It will go to at least 2 classes per week from one. Since it is the first live revision class, the topic is investment appraisal. There are a number of objectives of the today's class. One of them is what sort of presentation do we need to show, especially on Excel, MS Word? Because in my regular class, I think some of the students they were asking this. So before we start our class, I really want to know how many lectures you people have seen. How many lectures you can write in the chat box? How many lectures you people have seen so far? Please, you can write in the chat box. Okay. Around 26.5 means 27. That's great. What about others? What about others? Students, please reply. 14. 14, that's great. Okay. Those students, they are just behind, I would say, 15th lecture. So they should need to little bit speed up, please. So just one piece of advice. Those students, they have not seen so far 15 lectures, they need to speed up. First, I'll be explaining the entire question on this OneNote, and then inshallah we'll be solving the entire question on Excel. And I'll show you the main objective is I'm going to show you the presentation, exactly what sort of presentation you need to show. Okay. And if there is any available shortcut, we'll be using that as well. So we are just discussing investment appraisal. And it is the first lecture, first live revision class, inshallah. When I'm going to conduct the next class, number one, the time duration, slowly and gradually, the duration of the live class will also increase, okay? Calculate the NPV of the investment project in nominal terms. Nominal terms means with inflation. Nominal terms means with inflation. And comment on its financial acceptability. See, commenting on financial acceptability is very easy. If project is producing a positive NPV, if project is having a positive NPV, then obviously such project is financially acceptable. Repeat. If project is having a positive NPV, then obviously such a project is financially acceptable. And nominal terms means with inflation. Right now, I'm not discussing anything regarding capital asset pricing model because that is going to be our next topic when we'll be discussing, inshallah, cost of capital. Then we'll be discussing all these things. Right now, objective, I have told what is the objective of today's first live revision class for the June session. HEBAC company is preparing to launch a new product in a market which is outside its current business operations. The company has undertaken market research, test marketing at a cost of 500,000. Can I say this 500,000 is a sunk cost? It is an irrelevant cost. Either you make investment or not. Organization has incurred this 500,000, it cannot be reverted back. So this 500,000 is a sunk cost. The cost which you have incurred in the past is irrelevant. I hope this point should be clear to everyone. This 500,000 is a sunk cost, irrelevant cost. As a result of which it expects that the new product to be successful. Okay. The back company plans to charge a lower selling price initially, and then increase the selling price on the assumption that the new product will establish itself in the new market. Forecast sales volumes, selling prices, and variable cost are as follows. They have given us sales volume of 200,000, 800, 900, and 400. Selling price is per unit 15, 18. Okay. Variable cost per unit. Variable cost is always relevant. Selling price and variable costs are given in current prices. Students, can I say whenever current prices, the examiner uses the word current prices, it means inflation will be incorporated from T1. Repeat. Current price means today's price. Current price means price at time 0. So whenever examiner says the given data is in current price, so you have to incorporate the inflation from the first year. Before taking accounts of forecast selling price inflation 4% per year and variable cost inflation is 5% per year. Another thing which I did covered in regular lectures, whenever there are more than one inflation rates, then you have to calculate NPV in nominal terms. Whenever there are more than one inflation rates, then you have to calculate NPV in nominal terms. If in the entire question there is only a single inflation rate, if in the entire question there is a single inflation rate, then it is up to you. Either you work in nominal terms or real terms, because in both the cases NPV will be same. Repeat. Whenever you have been given more than one inflation rate, okay, it's okay, it's okay. We have just started. No issue at all. We have just started. Okay. So whenever more than one inflation rate is given, you have to work in nominal terms. If there is a single inflation rate, then it makes no difference on NPV. Either you are calculating NPV in real terms or nominal terms. Obviously, here we have to calculate NPV in nominal terms. One, it has been asked by the examiner to calculate NPV in nominal terms. Second, to justify his requirement, examiner has given us more than one inflation rate. Now it makes more logical that NPV has to be in nominal terms. Incremental fixed cost. Look at the name. Incremental fixed cost, additional fixed cost is always relevant. Incremental fixed cost is 500,000 per year in current price terms. Again, whenever the word current prices comes, you have to incorporate inflation from the first year. If examiner gives you the first year price, then you need to incorporate the inflation from the second year, because first year price means inflation of the first year is already incorporated. Over here, examiner has given us the current prices, data in the current prices. It means logically the current price means price at time 0. So whenever question says current prices, we have to incorporate the inflation from T1, from the first year. Incremental fixed cost is 500,000 per year in the current price terms, would rise as a result of producing new product. Fixed cost inflation is 8% per year is expected. So inflation of the fixed cost Examiner has also given. Just a minute. So whenever in question examiner says current prices, so simply we have to incorporate inflation from the first year. Okay, fixed cost inflation is 8%. Fine. The initial investment cost of production equipment for the new product will be $2.5 million. Payable at the start of the first year of operation means T0. Production will cease at the end of 4 years because of the new product is expected to have become obsolete due to the technology. Can I say the project is having a life of 4 years? The production equipment would have a scrap value of at the end of year 4 1,25,000 in the future value terms. Something very important examiner has written. Examiner says 1,25,000 in future value terms. Actually, examiner wants you not to incorporate any inflation in the scrap value. With 125, he has not written current value. He's saying future value terms. So simply, this is the scrap value at the end of T4. Look at the terms. Investment in working capital 1.5 million will be required at the start of the first year of operation. Okay. Working capital inflation 6% per year is expected, and working capital will be recovered full at the end of 4 years. We know that working capital can never be consumed. Whatever your organization has invested in the working capital, it will be recovered at the end of the project's life. But we have to do the proper calculation of the working capital since we need to incorporate the inflation into the working capital. It means working capital requirement is going to be different in each year. It will not be same because of the inflation. HEBAC company pays corporation tax 20% per year, with the tax liability being settled in the year in which it arises. Can I say same year? It is same year. The company can claim tax allowable depreciation 25% reducing balance basis on initial investment. Adjustment in the final year of operation for a balancing allowance or charge. HEBAC company currently has a nominal after-tax weighted average cost of capital 12%. See, examiner has given you the nominal cost of capital 12%. Real has been also given. Can I say real is irrelevant for us? Real is not relevant. The company uses its current WACC as the discount rate for all investment projects. Company uses current WACC as discount rate for all the investment projects. I just want to tell you one thing regarding discussion. Please just try to understand. You might have covered the cost of capital topic or you might not have covered. I just want to give you a little idea. Please try to understand what is written. The company uses its current WACC as a discount rate for all investment projects. So let's say they have a policy that we'll be using our current WACC for all the investment projects. This policy is logically incorrect. Why this policy is incorrect? Because every project will not have the same risk. Logically, this policy is incorrect because every project will not have the same risk. And especially if you read the first line of the question, HEBAC company is preparing to launch a new product in a new market. If you are going towards a new market outside its current business operations, please try to understand. If you are approaching a new product in a new market, which is outside the current business operations. So logically, whenever you're entering in a new market, whenever you are entering in a new industry, logically your business risk will change. Your business risk will not remain same. So due to this investment, when my business risk is changing, so logically I should not be using my current WACC. Logically, I should be talking about risk adjusted WACC. So I'm just wanted to give you a little idea. Of course, examiner has not asked us to discuss anything on the policy, just to give you a little knowledge that when you are doing something different, you should not be using your current WACC. And plus, using current WACC for all the investment appraisal project is again not appropriate at all. Now, dear student, what we actually have to do, we have to incorporate inflation into the selling price from year one, inflation into the variable cost from first year. In fact, inflation we have to incorporate into your additional fixed cost from the first year. Why first year? Because question says all these prices are in current prices. Current prices term means prices at time zero. So obviously we have to incorporate inflation from T1. Another thing, let me just give you idea. Then we'll be solving inshallah on Excel. Listen, when you will be calculating tax saving from capital allowances, how to perform that calculation on Excel, that is more important. Logically, when you are solving tax saving, when you're doing a working of tax saving from just a minute. Okay. See, whenever you are doing the working of tax saving from capital allowances, on Excel, I would say always show the working horizontally. It becomes easy to take the data from that working to the main presentation. How I'll show you that, inshallah. So I think story of the question everyone has understood, and I have also explained the number of concepts which are in this particular question regarding nominal, plus something regarding the policy which they are following, that are using the current WACC for each and every investment project. Logically, it is an inappropriate policy. Another thing is they are paying tax in the same year. There is no delay. Normally, you will see the delay in tax payment in most of the question, but in this question, examiner has already mentioned they are paying the tax in the same year. So let me bring the sheet of Excel. Let me share this with you. Just a minute, zoom in. Oh, that's good enough. Okay, first you have to make the presentation, means main answer of the question. We are doing, let's say, I think it's question 32, and we are doing part A. And we are calculating actually NPV. Project life is 4 years. Okay, I'm just ignoring 3 zeros. Okay, initial investment. minus, I have to go back to the question, just a minute. Initial investment. Where is the initial investment? Initial investment, they have given us 2.5 million. Means 2,500 because we have ignored 3 zeros. Initial investment, dear student, they have given us 2.5 million means 2,500. You have to write that in negative. That's your outflow. Okay, now actually we have to show the proper calculation of working of sales. Do not do each and everything directly. Okay, so sales working one. Let me show working here. Time, it is 1, 2, 3, and 4. I'm just taking, let's say, selling price per unit. But we have to go towards one note. Let me write, this is in the calculator. 15, 18, 22, 22. Okay. And inflation, it is 4%. Fine. Just a minute. It is 15. And not now, but towards the near to the exam, or maybe I would say end of April, inshallah, we'll be doing some of the question directly on the CB platform as well. So that you should be having a really good idea what sort of, surface will be available. Exactly, I really want to give you the same simulation. So ACCA CB platform gives you the simulation which you are going to face in the exam. So we'll be doing number of questions on that CB platform as well, so that you should get a really good idea. Inflation rate, they have given us 4%. Okay. So simply selling price per unit after incorporating inflation, which is 4% per year. We'll take this, multiply by shift and then 8. Shift and then 8. You will get a multiplication sign. 1.04. Because inflation rate is 4%. And let's say there is no need, but just to show you, shift and 6 is the power, and I'm taking power 1 because it is the first year. For the second year, I'll take 18. Shift and 8. 1.04 shift and 6 power 2. I hope everyone knows that how we are incorporating the inflation. 1.04 and we have to take power 3. One 1.04 and let's say take power 4. Something went wrong. Oh, point. Okay, I don't need help. Point. Now, you should show the sales volume as well, but we are ignoring 3 zeros for the sake of simplicity. In the first year, dear student, we have units 200. We are ignoring 3 zeros. 800, 900 and 400. Now I think very easily we can calculate sales. Now calculation of sales should not disturb us. I'll take the selling price into sales volume. Now the option of drag will work, inshallah. I hope the working of sales is clear to everyone. I have answered at least one question, how to present the working. I would request not to do all the workings directly. Try to show some steps like I have showed. Instead of just calculating directly the last answer and showing the working only in one cell. If you don't have time in exam, then do it. Otherwise, please solve as we are solving right now. So I hope few queries now should be cleared. Then how to show the working on Excel. This is in front of you right now. So just take this. Option of drag. I'll be using only those shortcuts which are obviously available in exam. The shortcut which is not available in exam, obviously it is useless to discuss such shortcuts. There's no benefit. The second is variable cost. Working to. Okay, let's come here. One, two, three, and 4. Let me take the sales. Okay, sales volume we can take. No issue. Variable cost per unit. They have given us variable cost per unit 9 each year. Since it is same every year, so we should be using the option of drag. Inflation is 5% if I'm not wrong. Inflated variable cost by 5% per year. We'll take this, multiply by 1.05. Let's take something is, I don't know what it is. This was the first year. 1.05. Now let's see the option of drag should work because we have created the link. Previously, actually, selling price was different in each year. That's why we did not go for option of the drag. Instead of that, we did something different. So right now, option of the drag should work. Sales volume, can I say we can take? We have written already. Let's ignore 3 zeros. Now we can easily calculate the variable cost. Just wait, then I'll take the questions. Since it's a cost, that's why I've written a negative sign also. Okay, now let's see what are the questions. If it's the same inflation rate, you should drag it. Is this clear now? If it's the same inflation rate, you can use the option of drag. If the inflation rates are different, then there's no need of dragging it. Is it clear? If the inflation rate is same every year, you should use the shortcut of drag. If it is clear, let me know.
Sorry, you're saying if it is the same inflation rate per year, we use the drag option, right?
Or if option of the drag is disturbing anyone, so there's no need to that you have to drag. You can separately calculate. The main thing is you have to show the working to your examiner. But where the shortcut is available, we should be using it. Okay. Now we do have additional fixed costs as well. Additional fixed costs, we can directly incorporate the inflation because that working is straightforward. Let's see what is the amount of additional fixed cost. They have given us the additional fixed cost, incremental fixed cost, 500,000, inflation rate is 8%. Just a minute. I think everyone can see this Excel. $500 into 1.08 power 1. Now you can simply drag it. Fixed cost working is clear to everyone? Please just answer. The calculation of fixed cost is clear to everyone, yes or no? We have incorporated the inflation because there's no need to show unnecessarily each and every working. Sales and variable cost is logical. You should show the working, but as far as fixed cost is concerned, it's just you need to incorporate the inflation. That's it, which we have done it directly. But directly does not mean, listen, you can't do that. That calculating the value on your, let's say, calculator and putting in the Excel, you will get 0 marks for that. Now listen, whoever is going to check the copy, what that person is going to do to see how did you get this 540, that person is going to just select this cell. As soon as I select the 540 cell, it gives me the complete address. How did you get this 540? I hope this is clear to everyone. Okay, fine. So we have calculated sales. We have calculated variable costs. We have taken the fixed cost because it is mentioned in the question, the given fixed cost is the incremental additional fixed cost. Now we can calculate the taxable profit. And then after that, we'll take tax saving from capital allowances. So simply taxable cash flows. Now you should be using a sum formula. And let me repeat again, I'm just using there. Okay, there are just few shortcuts which are available in your exam, like drag, sum formula, things like that, IRR, NPV. So these are the few shortcuts available which I'll be using them. Tax is paid in the same year. It is mentioned in the question. Tax is paid in the same year. What is the tax rate? Let me check. Tax rate is 20%. So we have created the link. So drag is going to work. Now, after the tax payment, just add tax saving from capital allowances. And we have to show the working. That will just a minute, I'll take the questions. And that is going to be a working 3. Okay, there was a question from the students. Question. No question. Okay. Tax saving from capital allowances, working 3. Tax saving from as I was discussing at the start of the question that you should show the tax saving from capital allowances working on your spreadsheet horizontally rather than vertically. It will help you. How? Let's see. Let's say 1, 2, 3, and 4. Capital allowances. Amount of the investment is 2,500, okay? And what is the method? Let me go back. 25% reducing balance. So 2,500 I'll take. 25% of this. I'm getting 629. Now, if you take 75% of this, you will get your result. For this, you can multiply H19 with 0.75. Now we'll take 75% of this. I hope this is clear to everyone. Now, in the last year, we take balancing figure. Remember? The investment amount is 2,500. From this 2,500, you will deduct this. This. And let's see, we have to deduct the scrap value as well if we have. I think they have given us the scrap value. That is 125. They have given us the scrap value, which is 125, if I'm not wrong. So the balancing figure is 929.688. When examiner or simply marker is going to check your copy, is going to select this cell and automatically the complete address will let that person know how did you calculate this. Tax saving will arise from the same year because from the T1 because tax is paid in the same year. Tax saving. Tax rate is 20%. So link has been created. Just drag. So you have calculated tax saving from capital allowances as well. Just show here. Now we have to work on working capital. And the working capital requirement in this question is not same. It will change because of the inflation. Working capital and recovery. That's going to be working 4. Let's show here. Working capital and recovery, because working capital can never be consumed. Whatever you have invested in the working capital, it will be recovered. And we start investing in working capital from T0. So T0, 1, 2, 3, and 4. Because the project life is 4 years. Okay. Now, let us go to the OneNote. Let me share the page of the OneNote. We are back. See, they are saying something. They're saying investment in working capital 1.5 million. Investment in working capital 1.5 million will be required at the start of first year of operation. Actually, at the start of first year of operation, you need 1.5 million. First, you need to understand start of T1 means you have to show this at T0. So logically, if I ignore 30, so you will be investing 1500 at time 0. At the start of T1 means you will show the investment at time 0. So it means 1500 will be invested at time 0. And how much inflation is then expected after this? 6%. So logically from T1 onwards, you will incorporate the inflation rate 6%. And in the last year, whatever you have invested, each and every amount will be recovered. Let me show this on the Excel. Working capital. I'm just writing 1500. After that, logically, this 1500 will increase. Inflation rate, they have given us 6%. Inflation rate they have given us, which is 6%. 1.06. Let's take power 1. I'll take 1590 multiply by 1.06. 1.06. Now listen, just change the heading also. Working capital with 6% inflation per annum. Okay. Now you have to actually, you need to work on incremental working capital. So no issue at all. Let me just write working capital and recovery. T0, 1500 negative. After that, please look at this. We'll take T1 minus T0. Before that, just put a negative sign. Negative sign. T2 minus T1. T3 minus T2. And in the last year, can I say whatever you have invested in the working capital, it will be recovered because working capital can never be consumed. So whatever is coming in the T3, entire amount will be recovered. So we have shown the working of working capital as well. And it is highly advisable that you should be dealing with working capital at the end, especially after calculating tax payments. Because if you deal with working capital before calculating the tax payment, then your taxable cash flow, your tax payment will be incorrect. So that is why it is highly advisable to deal with working capital after you have dealt with tax payments. And we'll start from 0. Option of the drag. Scrap value, I think it was 125. Also residual value. Also remember, always show the residual value after you have calculated tax. Otherwise, your tax payment will be incorrect. Also show your scrap value after you have dealt with the taxation. Now you will be having, we can easily calculate net cash flows. T0, it is this. And let's use a sum formula. But make sure you can use it some formula, but you have to stop till taxable cash flows, because already till taxable cash flows, you have already used one sum formula. So let's see how many cell we are going to select. 1, 2, 3, 4, and 5. Stop. And something went wrong. Let's see what and where. It is 587. Now the option of drag is definitely going to work, inshallah. We need to know the nominal cost of capital. Nominal cost of capital is 12%, if I'm not wrong. Okay. Now you can calculate NPV either in one step or two steps. It's up to you. If I calculate present values from T1 till T4, present value from T1 till T4. We'll take rate. So we have calculated the present values from T1 till T4. Now, after deducting initial investment, you can easily calculate NPV. Or you can directly calculate NPV. Let me show you. NPV. NPV is, can I say, 11,980. NPV we are getting as 11,980. And obviously, NPV of the project is positive. So project is financially acceptable. NPV of this project is positive. So the project is financially acceptable. There is no issue at all if you are just writing a single line on Excel, because just to write this one liner decision, there's no need to go towards MS Word and write. See, if your requirement, if you're dealing with a requirement which is pure theoretical, then obviously it is highly advisable to solve and to give the answer on MS Word. But entire question answer is numerical and you just have to write a decision. There's no need just for 1 or 2 lines go towards MS Word. I strongly believe I have answered at many questions, especially regarding, I would say, presentation, how to show the presentation and workings. And this would have been better if instead of working, which we started from G, I think that was G4, we should have started from H4. That would have been much better. But still it is okay. No issue at all. So any other question relating to the presentation? Is it clear to everyone now? What should be the presentation of investment appraisal question on MS Word? Is it clear to everyone, please? Students, I'm waiting. So I think everyone has understood. So thank you very much for coming up and taking this live class. Please do give the feedback in your relevant WhatsApp group. It will encourage, obviously, it encourages the teacher as well as the other students so they can also come for the next classes. Inshallah, in the next class, we'll be doing other areas of investment appraisal. So in the next class, inshallah, we'll be discussing other areas of investment appraisal. And today's live revision class will be uploaded, I think, within next 3 to 4 hours. And it will be at the end of your course. So thank you very much and have a nice life.